Hello, my name is Noel, and I run a single-family office called Asia Pacific Real Estate Holdings, which invests in public real estate companies across Asia Pacific, as well as mezzanine debt, project finance, and private companies. I have been a member of the Singapore Stewardship Principles for Responsible Investors Steering Committee from its inception 75 years ago. Following Rajiv's session on innovative practice and stewardship, I'm here to talk about practice and implementation. And I will discuss this largely based on my experience as an investor across both public and private markets. The family believes that investment returns ultimately derive from creating real economic value. Hence, we take a long-term approach to investing and engage with our investee companies wherever appropriate. Additionally, environmental, social, and governance, or ESG, considerations are an increasingly important component to value creation as the world comes to better realize and take into account or price the impact our actions have on the environment and the broader society. We see this in how long-term investors such as pension funds and insurers are pricing in carbon risk and the potential impacts of climate change. Hence, ESG is and will be an increasingly important aspect of value creation going forward for how companies operate in society. I think as investors build their portfolio, there are various means they use to ensure they integrate both strategies. The commonly discussed approaches that asset managers take to implement the strategies could include integration, screening, thematic engagement, or voting. For us, engagement has been the most effective because we can then instill some of the stewardship values that Rajiv discussed in his presentation to build a resilient portfolio. In an age of wild cryptocurrency price swings and herd trading by social media, it can be challenging to remain anchored to investment fundamentals. That investment returns are derived from real economic value created over the long term. However, while prices may fluctuate in the short term, it is my belief that they will eventually revert to their underlying economic value, and when such reversion occurs, it is the investors who have remained disciplined and who practice investment stewardship who will emerge ahead. Importantly, the value of chasing short-term price fluctuations is uncertain, and I believe investors are better off focusing their time and efforts on creating value over the long term. I have often been asked about the unique challenges faced by smaller asset management firms compared to those of their larger counterparts. Well, our AUM is small. My family office manages about $10 million, so very small in the overall context of asset management firms. But for us, the main challenge is less the size of the investor and more the size of the investor's position in the investee company. Despite our size, we own over 10% in certain companies, and there are clear and direct benefits from the practice of stewardship in such instances. We are pretty hands-on in discussing appropriate corporate strategy and ESG issues with management, with very frequent board meetings. In contrast, in the case of owning 0.01% of a public company, for example, the benefits of stewardship are less clear. We have too low a voting threshold to significantly influence corporate policy, and management would symmetrically be less inclined to engage with us. In such instances, investors are encouraged to work together in the practice of stewardship. In summary, there is a framework that we adhere to in the practice and implementation of stewardship. First, you need to take a stand on stewardship, that you need to adopt this mindset and approach as a way of adding value to your investments. Our highest returns have come from investing in private companies where we were very involved at the board level in setting strategy and resolving differences in priorities amongst various shareholder groups. Secondly, transparency. We take a strong stand in upholding transparency in managing conflicts of interest. And thirdly, we are actively engaged with our investee companies to ensure sound corporate governance and business practices.